Francis Lin is here. He's managing director at Lyncean Holdings, which, as he tells us, is related to being cat-like, like a lynx. So he's very aggressive, ferocious lynx. Francis Lin is with us. He's going to explain to whether he's being aggressive in this market now as well.
Well, I think it's time to buy because starting in May, April, and July have been 3 months of decline, especially in the month of July. So prices have fallen to rock bottom. And now it's time to go bargain hunting. That's why you see the market rebound now.
Now, you say that it's time to go buy, but how long will these gains last for?
Well, I think the investors are hungry enough that, they've been starving in 2011. The market has been a steady decline, especially ever since mid-April. So the average PE of blue chips have been down to 10 times.
Where, in China?
Yeah. In China, well, China still has a little downward slide to go because there are many problems and with austerity measures, etc., and really tight liquidity in China. I think when and if liquidity loosens in China, I think you will see.
But Francis, you said that because of the U.S. debt crisis, all Asian markets will fall substantially in August. Are you still sticking by that prediction?
No, because
that's out the window.
Because last week there was no agreement in sight. The Democrats and the Republicans were still at loggerheads, but now at the 11th hour they've reached something.
But didn't everybody really predict that they were going to get something on the 11th hour anyway?
Well, everybody hoped so because that was reflected in the currency market.
What kind of deal is this? I mean, take a look at the numbers. It's not a big budget cut. We're looking at $2.5 trillion in total.
Yeah, when you're running a deficit of 1.5 trillion a year, a 2.5 trillion deficit cut is in 10 years really peanuts, really. And the U.S. really doesn't solve any problems.
Okay, and plus you should get to combine the factors as well. We were talking about anemic economic growth, GDP, at 0.4% in the first quarter.
That's right.
And then you have fiscal spending cuts. I mean, if you combine anemic growth, the spending cuts, to some, that's not exactly a good brew.
And we've got the payrolls number at the end of the week as well.
Yeah, that means the U.S. will fall into a prolonged recession or a period of very low economic growth. But the other side of the coin is Asia is still in relatively good shape because the two other biggest economies, China and India, are still growing, and Hong Kong is still growing because of that. So if you look at East Asia or including South Asia, I think you can still be optimistic.
Let's talk about China now, because that's another reason where we're getting a bit of a fill-up. We've got better than expected manufacturing data. The PMI figure came in. The official one showing expansion. HSBC's showing contraction in July. Which number do you believe?
If I have a choice, I would rather believe in HSBC's figures because they are independent and third party. So actually, you have to draw from your experience. If you talk to manufacturers in Dongguan or in Guangdong, which is one of the major exporting hubs of the world, actually, the appreciation of the yuan and the increase in the minimum wages, like something like 10 or 15% a year, really have eroded the competitiveness of manufacturers in China. And for the low-end products, I think China is now in a high-cost area.
So it's got to move up the value chain, hasn't it? That's
China has to move up the value chain, otherwise it will not be competitive. I think this is the problem that China has faced. So you can say that American pressure have worked in the yuan appreciation.
Is it at fair value? Some suggest that it is now at the right sort of price against the dollar.
Yeah, I think so, because I think in one of the months, in March or so, China actually recorded a trade deficit. That's because of the import of petroleum. But you can actually see the trade surplus of China gradually decreasing, just like what happened with Japan. Like a decade ago, when the export surplus shift to other low-cost countries, maybe like Indonesia and India. So I think China, well, it is a major economic transformation for China now.
Yeah, I'm going to get back to the debt debate because that fascinates me considering...
Really?
Well, yes. It's a very exciting topic, as we can see on the markets. You know, S&P futures, Dow futures are spiking at this point. But I was talking to someone earlier on this morning. He says, okay, so what are we looking at? $1 trillion in budget cuts? That still doesn't reduce the U.S. GDP to debt. You know, it's still at 100%.
Yeah,
so
that's right.
How big of a deal is this?
It's actually too little because the U.S. is running an annual deficit of 1.5 trillion U.S. dollars. And you're talking about cutting $2.5 trillion in 10 years. That really doesn't help. So the U.S. will need to keep on piling more debt until you reach, say,
and it's only
$960
billion initially, and then you have a committee, a bipartisan committee, trying to oversee these cuts, $1.5 billion cuts over the next 10 years.
Yeah, so you have this Washington gridlock, what they call it, the Beltway gridlock for the next 10 years.
We'll get another, I mean, this is a two-stage plan, so we'll get something in a couple of years, Phil.
I mean, the issue is will there not be a downgrade to the U.S. debt rating? I think that is going to be key. If they can keep rates at this level, the United States can continue on for some time because rates are relatively low.
Have we done enough is the question, I suppose, Francis.
Yeah, well, Standard & Poor's actually threatened to downgrade if the spending cut was less than $4 trillion. So if Standard & Poor's followed through on their promise, they will downgrade U.S. debt to maybe
three to 4 trillion, right? That was the number, 3 to 4 trillion. So this is 1 plus 1.5 trillion. So it's 2.5 trillion. So they're almost there, but there are some automatic triggers that take place. And this is the key thing: is the triggers, right? If they do nothing, then automatically it's 1.5 trillion that they trigger in terms of cuts. If they do something by the end of the year, and apparently this is the proposal in place now, that it potentially could be a little bit more or a little bit less than that. But is that enough to satisfy this 2.5 trillion number, the ratings agencies?
Well, we had PIMCO's L. Arian, the CEO of the world's largest bond fund, recently on the Sunday morning shows in the U.S. saying that this is a political issue now, and there's no way the S&P will want to basically step up in the political arena and try to downgrade the U.S. debt.
Would the S&P be so unpatriotic in downgrading the U.S. debt?
Well, the United States, it's the third largest exporter in the world. I mean, there's not an issue with revenues at this point. I mean, this is, again, you mentioned it's political, and I tend to agree it is political, but the issue isn't with the revenue side of the equation. They have enough money to pay the bills. Being default is not, it's a completely different situation than Greece or any other of the countries we've been watching, right?
Definitely.
So
Greece is broke, basically.
Is that what you think?
Well, let's leave that. We'll leave that for the next segment. But look at how the United States is dealing with the problem. They're going to have these austerity measures, for lack of a better word, and if they can push that through, it does improve the balance sheet by a significant amount. It's much better than doing nothing.
Definitely, but I think they really should follow the UK model, where they really drastically cut government spending, like putting 50,000 civil servants out of work and things like that.
Some say they've gone too far, the Cameron government, the coalition.
Yeah, what about taxing bankers 50% of their bonuses? How would you feel about that?
Oh, I think that's great. They're making obscene amounts of money. They deserve to get a pay cut.
That's a breaking news wrap, I think.
But, okay, how does this affect what's going on in China? We saw those PMI figures. We talked about those. You don't trust the official figures. You like the HSBC figures. Tell us more about this.
Well, actually, Vice Premier Li Keqiang once said, I don't read those official figures. I look at the rail transport figures. I look at the electricity generation figures. I mean, these figures actually reflect economic activity. And official figures always been doctored and to suit the government.
I just want to say, look, even if there's a slowdown in China, and arguably right at 50, right? The official figure is a little bit above 50, the HSBC one's a little bit below 50. But even let's say the economy did slow down significantly more, doesn't China have a lot of instruments? They can cut rates, they can cut AAA, and cut interest rates. They can do a lot more to stimulate the economy if they need to. Isn't that correct?
Yeah, but they have another problem. They have also have very high inflation, and high inflation is what causes popular discontent. So they have to control inflation, but at the same time, they don't want the economy to slow down. So there's a paradox there.
Is it okay if there's inflation? Let's say the inflation is running at 6, 7, 8%, but at the same time, people are earning more as well because the economy is growing. Is that okay?
I mean, we talked about that as well, didn't we? The 13% minimum wage rise at the moment.
That's right. When you increase minimum wage by that much, the bottom of your manufacturing economy has become uncompetitive. So you have all these exporters actually shutting down factories. If you go to Dongguan, 10,000 factories been shut down since the beginning of the year.
Where'd you get your figures from?
I learned it from my friends in the manufacturing sector, in the export sector from Hong Kong.
You know, are you surprised that we didn't get any reaction in the markets from the story that we got on Friday, basically saying that the stress test on banks, that if property prices fell 50%, banks will do okay. They have enough capital buffer to withstand a 50% drop in property prices in China.
Do you believe that?
I believe that because in 2003 in Hong Kong, property prices dropped 70%, and not a single bank in Hong Kong failed.
Okay, but that was SARS.
China banks can withstand
that. I think the question, that's a short-term jolt that you're talking about. What if there was a longer-term extended period, say over a couple of years, where the property market was, say, down 15 or 20% for 2 years in a row? Would that have an impact on, I mean, that has to have an impact significantly on bank earnings?
Well, definitely, but don't forget that China banks are basically government-owned. They will do some asset reallocation, and then they're buying all these bad assets, bad loans from the banks, and then to make them healthy again.
We were watching the Shanghai Composite earlier. You know, all the markets around Hong Kong, HSCEI, but Shanghai wants to do its own dance to its own song.
Because it's such an insular market, right? There's so little foreign money in that market.
Francis, where are you invested?
Well, I'm invested in gold. So people go, it's 1620. Yeah. I think it go to 1800 this year.
Yeah, you reckon?
Yeah, that's right.
Because he's not too far away.
Just 4 months away.
Because people losing faith in the U.S. dollar, losing faith in the bonds, in the euro, so you run to commodities.
What about the Chinese currency? So we're saying that's a pretty safe bet. You have 5% gains.
The yuan is a good bet, but I think the gold will appreciate more than the RMB.
Well, how do you think the RMB is going to do anyway? You know, do you have any idea of how high it'll go this year?
Well, I think I don't think it will jump up.
Because I think it's very limited in terms of
because China trade surplus is declining. So I think the pressure is decreasing for the
Okay, so I talked to Francis earlier on about this management change, personnel change at the head of the SFC, which is equivalent to the SEC here in Hong Kong.
That's right.
And before it was Martin Wheatley, another British man. Now it's I think it's Mr. Alder, who is the head of a law firm here. But you know, why is it that we keep having, say, expats, British expats at the top of the SFC? There's a specific reason for that.
There's a specific reason, and actually the financial community agreed that if you want to carry out meaningful supervision of the financial markets, it's better to get an outsider, because if you get a local Chinese, in some way or the other, they will be influenced directly or indirectly by one of the tycoons. So
by tycoons.
That's right.
By China.
I mean, is there any expected changes that they're going to make in the near term, you think?
No, I don't think so. Because if they want to elevate a local to the head of SFC, they would have done it before Martin Wheatley.
Yeah. Let's also just talk about the Hong Kong Stock Exchange as well, and the rumour of a possible takeover of the London Stock Exchange.
Oh, I doubt it.
You don't think so? Why?
I doubt it. You see,
LSE needs to do a deal there, doesn't it, of some form?
Yeah, you can do it, but you don't want to do a deal for the deal's sake, like Singapore is doing. I think what you really need is face the real trouble in that the black pool is going to make Hong Kong Exchange obsolete. I think that is the biggest challenge.
So you think that was a deal for deal's sake? Because Singapore is saying we need to get bigger. We need to basically get reach in partnership. Otherwise, we get lost in the mix, right?
Well, I think they better do something to counteract the threat of the black pool, like New York Stock Exchange decline because of black pool, and the same thing happened to Nasdaq.
It's not dark pools, it's black pools.
It's not black pools.
That's
dark pools.
That's right.
But you don't like it because being like a cat, of course, a lynx, because it's Lyncean Holdings. I mean, you've got 9 lives, I take it?
No. Well, you just want to be quick. In the investment world, if you're not quick, you'll be left behind, way behind.
But that's because you're cat-like speed in the markets.
Francis,
thank you so much.
You're welcome. Wow.